Imagine waking up on the first of every month and seeing cash hit your account, not from your job, not from a side hustle, but from investments quietly working in the background. That's the power of monthly dividend income. And in 2026, more Americans are shifting from chasing risky growth stocks to building reliable cash flow portfolios that pay them like a paycheck. With inflation still affecting everyday expenses and uncertainty around interest rates, investors are now prioritizing consistent income streams they can depend on, almost like creating their own private 401k style payout system. Here's the key idea most people miss. Not all dividend stocks pay quarterly like traditional blue chip companies. Some specialized investments, especially REITs and income focused funds, are structured to distribute cash every single month. These companies generate steady revenue from rent, mortgages, or diversified income streams, and then pass a portion of that income directly to shareholders. That means instead of waiting 3 months for a payout, you're building a smoother, more predictable cash flow cycle, which can be incredibly powerful for budgeting, reinvesting, or even covering bills. In 2026, some of the most talked about monthly dividend players include real estate investment trusts that focus on commercial and residential properties, as well as funds that bundle high yield assets into one portfolio. What makes these especially attractive right now is the combination of relatively high yields and the compounding effect when dividends are reinvested. Investors are essentially using a strategy where every monthly payout buys more shares, which then generates even more income the next month. Over time, this snowball effect can turn a modest initial investment into a serious passive income engine. But here's where smart investors separate themselves from beginners. They don't just chase the highest yield, because a high dividend can sometimes signal risk. Instead, they look at fundamentals like payout ratios, cash flow stability, and how well the company performs during economic downturns. They also consider tax implications, since dividend income can be treated differently by the IRS depending on whether it's qualified or ordinary income. This is why many investors strategically hold these assets in tax-advantaged accounts like a Roth IRA to maximize what they actually keep. At the end of the day, monthly dividend investing isn't about getting rich overnight. It's about building a system where your money consistently works for you, quietly and predictably. In a world where financial stress is common and job security isn't guaranteed, having investments that pay you every single month can change how you think about money entirely. The goal isn't just income, it's freedom. And for many Americans in 2026, that journey starts with the right dividend strategy.